For a look right now at what's in store for this the holiday season is former Walmart U.S. president and CEO Bill Simon. And Bill, thanks for being here. Those numbers from Adobe pretty strong. Do you think that carries over into in-store shopping as well?
Hey, good morning, Becky. Yeah, I do. I think I'm expecting a very good selling season. I think the consumers, breathing a sigh of relief that the election's over and all the noise from the election is kind of quieting down, whichever side you ended up on. I think there's just a general kind of consumer relief, and we're moving forward. And it's been extended over several days. It's happening online. You've got a situation where margins have been pretty healthy in retail. Some succeeding. Walmart reported traffic up and sales up. Target had decent margins, but traffic and sales down. So I think it's going to be an aggressively promoted holiday selling season, and the consumer is going to benefit from that.
Meaning that there are goods in the stores and they have to move them, so the prices will come down starting now?
Well, they're competitive, right? This is your time to make your number for the year, and most of the retailers have had pretty decent margins throughout the year, and so they could sacrifice a little bit of margin for some sales volume, and I think you'll see that, especially in the ones that have been struggling throughout most of the year.
You said categories like apparel and home, you expect to see a little more momentum. Those categories have been soft for a couple of years now.
Yeah, they've been close to dead for several years, flat to down. And Walmart reported in their last quarter the first positive same-store sales in those categories, and I think in about 11 quarters. And if that trend carries through, that'll be a really nice tailwind for some of the department stores, Macy's, Kohl's, and some of these guys who've really been struggling lately.
One of the things that Jan Kniffen said when he joined us earlier is that consumers are maybe moving back in more force into goods, that consumers have looked around, have realized that when it comes to services, there's more inflationary pressure. Prices are up there. When you look at things like a sweater, a pair of pants or something, you think, well, maybe that's a better deal because the inflation hasn't hit as hard there.
Well, I think inflation in services by definition labor driven, right? Because you're buying a service, and labor rates have gone up inflated at a higher rate in some cases than products and goods. And I think once we've sort of probed the complete extent of all the services that are available, you sort of go back to, well, that was a wonderful experience, but I don't really own anything. And I think you'll start to see some of that as well, especially in these categories that have just been beat down, just really beat down. And the retailers that work in those areas, I think, will stand to benefit from that.
Black & Decker saying that it may get ahead of some of these looming tariffs by raising prices. Do you expect to see that in other places? In other words, would the lesser relative inflation we've seen in goods, you expect that to turn around because of these potential tariffs?
I'm not really concerned about tariffs at this point because mostly it's noise at this stage. There's a threat of a tariff and a threat of a retaliatory tariff. Where the tariffs actually end up are one thing. And then, as you know, Becky, there's a ripple effect, right? So there's a tariff on tequila. Well, I won't drink a margarita. I'll drink a mojito. And so the consumer impact on it isn't really carried through till the second or third or fourth ripple. And so I think anybody who's pricing in, potential tariffs at this point is doing so because they're trying to grab some margin while they can.